We are going to look at a case study of working capital management, and the company we are taking here is Bajaj Allianz. Bajaj Allianz is an insurance company, which is one of the biggest insurance companies in the world. So first of all, let us recap the importance of working capital. It is important that we work out high level of working capital. Working capital means if it is too high, then there will be surplus funds which will not be properly utilized and they will not earn you a return. And if it is too low, means you are facing financial difficulties in repaying your debts, repaying your financial obligations, running the operations, etc. So you need to find the right balance, and that is working capital management is all about. So to forecast the optimum working level, we look at the formula. So operating cycle is duration of operating cycle is equivalent to raw material plus work in progress period plus finished good storage period plus debtor collection period minus creditors payment period. Means that is a payment deferral time that you have. You don't have to pay back immediately, so you add everything to get the operating cycle and reduce the creditor payment period from there, and that gives you the operating cycle. So duration of the operating cycle is equivalent to the raw material storage period, work in process period, finished storage period plus debtors collection period minus creditor payment period, the time you are getting to pay back to your creditors. You don't like big companies, big corporations get some time to pay back. You can take goods from your suppliers, or you get a loan from bank. You don't have to pay back immediately, and that deferral time is the creditor payment period. You reduce that from the addition of raw material storage period, work in process period, finished good storage period, debtor collection period. Debtor collection period is the time that you require for getting back payment from your debtors, minus creditor payment period. So you have to you have to keep all these factors in mind while calculating the operating cycle. So Bajaj Allianz is a life insurance company. It's an alliance. It's an union between Allianz, German company, Allianz SE, and Bajaj Finserv. So they manage assets worth over 55 lakh crore rupees. So they are one of the biggest corporations in the world. And Allianz have more than 119 years of financial experience, and they are present in more than 70 countries around the world. Bajaj Allianz have been doing their business pretty well. Since they have so much experience in the market, they are managing so large assets, and that's why we are taking their case study, so to see how their working capital works for them. So the component of current assets, the composition of current assets on the main components current assets at Bajaj Insurance Life Insurance Company are cash and bank balance, loan advances and government securities. So miscellaneous current assets are also component of current assets, prepaid expenses, outstanding income like interest receivable, and other current assets are also included in miscellaneous current assets. Here we look at these numbers. These numbers tell about the current assets of Bajaj Allianz, which are sundry debtors, cash balance, and bank loan advance, and other current assets. So these are the components, sundry debtors. So the amount that you are going to get back from the debtors, cash and balance, the bank balance you have, the loan advance, other current assets in total. So we have seen that in 2008 and 9, it was at 53 lakh 81,360 crores, and in 2009 and 10 it has decreased a little. 2010 and 11 it has gone up again to 8 lakh 217,555 crores. So we have seen how these numbers move over time. So asset of company amounted to rupees 54 lakh 60,356, which included 35 lakh 52,963 of cash and bank balance of 76,970 crore of loan and advance, rupees 18 lakh 28,423 miscellaneous current assets. Current assets of the company increase in all 4 years. Current assets is increasing over time. Components of, now we are looking at the components of current liabilities. So the composition of current liabilities are the tax provision, staff bonus, proposed dividend payable, and other liabilities that are incurred from other sources. So we can see that the current liabilities are also increasing over time, except for 1 year, 2010-11, where it has decreased a little as compared to 2009 and 10. So we can see that current liabilities also have been increasing over time. So now we are looking at working capital of BALIC. Working capital, BALIC means Bajaj Allianz Life Insurance Company, and we can see here the working capital is the difference between current assets and current liabilities. So in 2008 and 9, it stood at 44 lakhs 70,970 crores. It reduced a little in 2009 and 10 to 2,377, and it again decreased a little in 2010 and 11, and it came down to a level of 9 lakh 7,866 in 2010 and 11. So the current, we are looking at the current ratio. Current ratio is the ratio between current assets and current liabilities. So this ratio tells if the company has a lot of debt as compared to the current assets, or if they have too much debt. If they have too little debt or too much debt as compared to current assets. If this ratio is less than 1, it is not considered to be very healthy for a company, because that means they have more liabilities as compared to the current assets, and that might indicate they are not able to pay back their liabilities on time. However, if it is more than 3, that also does not indicate that the company is doing very well. That might mean that the company has a lot of current assets which are not being utilized properly. So a ratio between 1 and 3 is considered to be the optimal ratio. Current ratio, the ratio between current assets and current liabilities. Here we can see that it is slightly less than 1 in case of Bajaj Allianz Life Insurance Company. In 2008 and 2009 it was 0.67. And 2009 and 2010 it was 0.5. 2010 and 11 it was 0.86, and 2011 and 12 it was 0.91. Average was 0.74. So it is not too bad, but it is not considered. It cannot be considered to be very healthy for a company. If it was greater than 1, we would have considered it to be better. But it's okay, since Bajaj Allianz is still managing to pay back its debts on time. I think it is still okay. So, and we can say anything when we look at the current ratio for its other competitors, but we cannot say that they are doing badly. They are doing reasonably well if we look at the competitors also. So debtors turnover ratio, this is the ratio between the credit sale and average debtors, and the ratio here is has been between 5.5 and 4.72. and it has remained roughly the same over the last 4 years. Now we look at creditors turnover ratio. So this is the ratio between net credit purchases and average creditors. And here we can see that in 2008 and 2009 it was 1.17, 2009 and 2010 it was 1.13, 2010 and 11 it was 1.13, 2011 and 2012 it was 1.12. So it has more or less remained constant over time, which indicates that the company has been more or less stable. It is they are not doing too bad in terms of creditors turnover ratio. Now we look at working capital turnover ratio. Working capital turnover ratio tells you how well your current assets are earning you revenue. So it is the ratio between net sales and net working capital. And net working capital is the difference between current assets and current liabilities. So they have a ratio of 5.05. So which can be considered to be good, because a lot of companies do not have, like Facebook had a working capital turnover ratio of 0.66, and Google and Amazon had the working capital turnover ratio of more than 1. But here, in case of Bajaj Allianz life insurance company, we can see that their working capital turnover ratio has been 5.05, between 6.86 and 4.65 for these years 2008, 9, 9, 10, 10, 11, and 11, 12. So which can be considered to be very healthy. That means their current assets are their net working capital is able to generate them a decent amount of revenue. So we can see that it's a very healthy working capital ratio, and it has been fairly constant over the years. It has not changed a lot. So here we can see look at the statement of changes in the working capital for the year 2010-11. We can see that there has been an increase in sundry debtors, cash and bank balance, loan advance and other current assets over these years between 10 and 11. 2010 and 11, we can see that it has increased. There has been a decrease in sundry creditors, bills payable and other current liabilities. So we can see that current liabilities are decreasing and current assets are increasing, but there has been an overall decrease. So we can see that current liabilities have decreased a little and current assets have increased. And now we compare the years 2011 and 12, and we can again see that current assets have increased and current liabilities have decreased, and there has been overall decrease in the working capital. So current assets for the year 2009 and 10 decreased, and application for the company and current liabilities for the company increased by 24,66,355, and by putting formula, the working capital is equal to current assets minus current liabilities. Working capital of the company for the year 2009 and 10 is 44,70,970. Current assets for the year 2009 and 10 increases, and it is good condition for the company, and current liabilities for the company decreased by 100,000, 17,000 and 796. It shows that the working capital of the company increased. Here debtors increased means cash balance of company decreased. Current assets for the year 2009 and 10 increases, and it's a good condition for the company, and current liabilities for the company increased by 11,53,939. That shows working capital of the company decreased. Here debtors decreased. That's good for the company and shows that the cash of the company has increased. The current ratio for the fiscal year 2008 and 9 to 2010 and 11 should slightly decrease. That is 0.67 to 0.91, slight increase. But in the fiscal year 2009 and 10, current ratio decreased comparatively in deposits and fiscal year 2010-11. Current ratio again increases 0.86 due to increase in factors which influences it. Okay, cash and bank balance to current assets ratio of the company in 2009 and 10 decreased, and 2010 and 11 it increased again. In 2011-12 it decreased. The above figure depicts that the cash and bank balance to total deposit of Bajaj Allianz Life Insurance Company has been slightly decreasing for fiscal year 2009 and 10, 2010 and 11, 2011 and 12. Net profit to current asset ratio in 2009, 2008, 2009 is 1.05, and it increasing slightly in the financial year 2009, 10, 2010 and 11, and 2011 and 12. So based on these findings, we are making some suggestions. In the year 2009 and 2010, the current assets of the company has declined, and current liability of the company has increased. Therefore, the net working capital has declined. Therefore, the current ratio has also declined. The net working capital has increased for the remaining year. The company has been able to repay the liability of the creditors because the profit of the company has increased every year. So that's a good thing. They are able to pay back their liabilities without much problems, and profit has also increased. So that's a good thing. Because of current assets has declined in the year 2010 and 11, but profit of the company has increased in 2008 and 9. Therefore, the return of current assets is high. That's also a good indicator for the company. Company has been able to fulfill a standard level of current ratios, that is 2:1. Therefore, the company has been able to repay the liability and loan of the company. So current ratio is like 2:1, current assets by current liabilities. So we'll look at these numbers again, and we can see that their current ratio has been close to 2:1. So these are the conclusions we have, and now we come to the conclusion of this working capital management course. And please post questions, please email me questions, please post question on forum, and please also do the assignment on time. Please try to answer the question that I've asked in the forum, and based on that I'll be making the evaluation. And thank you very much.